Hello, everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. My guest today is Carlos Sanchez, Director of Asset Management at CPM Group. Carlos, nice to have you back.
Thanks, Norman.
Now, you've transitioned into asset management now. I know you were a metals analyst and a metals specialist. Let's start off there. So now you're active in the markets, you're trading, you're managing money. Where are you active right now, if I could ask you that?
So right now, of course, gold and silver. Gold and silver, I'm pretty active there, but I'm also long platinum.
Platinum. Why is that?
So, well, platinum, you have some positive fundamentals. You've got issues in South Africa with mine production. You have rising demand. Here in the U.S., the auto market is picking up. China, as you know, is a growing market, and even things are turning around in Europe. So, positive, bullish on platinum.
Now, platinum, the price has pulled back. How significant has the pullback been? Because we've seen gold, for example, in the last 2 years come down quite a bit. Has platinum experienced a similar pullback?
Well, platinum's, yeah, it's been pulled back by some of what's happened, I guess, to gold and silver. But I think platinum has more of a floor to it, just because there are
what price?
I would say 1,200 to 1,300 is the floor. And I think that's a floor where you want to look to get into being long platinum, just because of that growing trend, that positive fundamental side.
And do people look at that platinum-gold ratio? So that would be roughly 1-to-1 right now.
Yeah, I don't tend to look at that. I think I look at more the fundamental aspect, the industrial demand, fabrication demand aspect to that platinum, as opposed to the ratio. I think gold, they're both working off of different factors. Gold more so what's happening in the macroeconomic environment, platinum more so what's happening with the basic supply-demand arena.
So there seems like there's a lag time, because you mentioned the auto industry demand, right? And I mean, I think we're up to the highest level of vehicle sales since 2008, if I'm not mistaken. So the demand has been building for a while, and so you're saying now you're going to start to see that kick in on the price side with platinum, right?
Yeah, I think it's kicking in somewhat. I think it's going to kick in more so with what's happening in Europe. There's a turnaround there. Even though you have seen auto sales decline over the past couple of years there, you've recently seen unemployment edge a little bit lower. Manufacturing is also picking up, especially in Germany.
Right.
And then while you have those issues in those southern countries, Spain, Italy, I think we're heading or in that trough right now.
Now let's talk a little bit about gold, which is kind of stuck in this mid-1200s, let's say the mid-1300 range. Do you envision that range, gold market to continue to trade in that range, or are we in a bottoming process? How do you view it?
I think that's a really tough market to call nowadays, especially with what's happened to the price over the past few months. A lot of that, what's being built into the price, is being influenced by what's happening in the macroeconomic environment, the Fed,
right?
What people think they're going to do, what they are stating they're going to do.
Right, maybe the taper, like people are betting on possibly the taper, which would be a cutback in their bond buying program as early as September.
Right. And
how do you think that would affect the market if they announced that they were going to go? I mean, Bernanke said, he mentioned it back in May, and the markets went into a tizzy, but then he kind of, softened up a little bit on that rhetoric, maybe rolled it back some. But if they actually go ahead, do you think that'll be negative?
I think it will be negative, but I think the question is when they will go ahead, when they'll make a strong suggestion that they will go ahead and taper. Because remember, they've mentioned two factors that they're looking for them to, I guess, really begin to taper or increase interest rates, which are the unemployment rate.
Yeah.
Right now it's at 7.4%.
Right.
And then the inflation, as long as inflation is kept in check. And actually what we've been seeing is, I think, over the past couple of months, is disinflation. So it's a little bit lower than the Fed is wanting, and unemployment is a little bit high. Well, it's higher than the Fed is wanting.
Yeah.
So I think there may be, we may not taper soon I think we're going to have to see a much more forceful improvement in those two indicators.
I actually think that taper would be bullish for gold, believe it or not, because, you know, the Fed's buying all these bonds. It's removing a tremendous amount of interest income from the economy. It's getting the interest as opposed to the private sector. Last year it turned over like $90 billion in profits to the Treasury. So if it stops buying these bonds, that's income that goes into the economy. That's a stimulus. So, I mean, I think everybody's got it wrong, but we'll have to see. In any case, I tend to be a contrarian on things like this. How about oil? I know you look at the oil markets. I mean, you know, we've had prices come back up again. WTI Brent spread has converged. Even I think WTI is slightly above now. That was a surprise to everybody, at least everybody who doesn't watch this show, because I think we talked about it here.
Yeah, you know, it's definitely a surprise. You know, basically went the spread from $26 or so to the premium, WTI over Brent. Now it's back off a little bit, I think $2. I'm surprised to see the volatility over the past couple of weeks. You know, that run up from basically after it broke 100 a couple of weeks ago up to nearly 110. You know, oil, I think. Oil's sort of it's a different animal than precious metals. There you have rising demand across the world, but it's not as strong as people expected just a few years ago with this shale boom and increased output in the U.S. China is not growing as fast.
And cutbacks in consumption here too. I mean, with gasoline consumption is way down.
Yes.
Or down, I should say.
Yes, exactly. And I think at oil above 100, I think it's overpriced. I think a good price would be 80 to 90.
Yeah.
So I think oil's heading a little bit lower.
A little bit lower. Now, the China card, I need to ask you about that because there have actually been some forecasts from some of the bigger Wall Street firms. In fact, one, I believe, recently from Goldman saying that the commodity boom was kind of over. I mean, they're looking at China, its growth slowing down. You know, their policy sort of unclear, but now more focused on, you know, their debt reduction and that sort of thing as opposed to investment and growth. Do you buy that at all, or you don't pay attention because it's too macro and you're more of a short to medium term focus?
No, you definitely have to pay attention to China, and I think, yeah, the commodity boom may be over because China's not growing at that plus over 10% per year, but it's still growing at 7.5%. So I think while you may not get that rally in industrial commodities such as copper above $4, I think it may head toward $3.50. But I don't think we're going to see just this, you know, singular one trend higher in base metals or the more of those industrial commodities.
Which is kind of like what we got in the last 10 years, sort of. I mean, like from 2001 or 2002 up to 2011, it seemed like all the commodities across the board were in these huge bull markets, and they went up to at least nominal levels that we have never seen before. And now it's kind of coming back into more of an equilibrium, and you got to trade them. And this has always been the case with commodities as far back as you can look. If you look at them on an inflation-adjusted basis, they have these long periods of kind of tradable sideways action. Then they break out into a new plateau somewhere, a new equilibrium is established, and they go like that. Could that possibly be what's happening now?
I think that is what's happening. You know, I think China, while still influential, you can't just look at China and say, okay, well, that's the sole factor. I think you have to look at other parts, you know, of the puzzle as well. You look what's happening in demand elsewhere in other developing economies, India, for example. You know, what's happening in Brazil. I think those are some factors that you have to look at now. It's not just the China story.
Sure. All right. And be prepared now to play both sides of the market, right?
I think so, yeah.
Carlos Sanchez, thank you very much for coming on the show. I appreciate it.
Thanks, Mike.
It's always nice having you. That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.